what are alternative payments now? I think there's a lot of clustering at the periphery of the payments business by people who want to make money out of that transaction point and use it to perhaps further some other ambition they have than purely making a payment, which is great. Offering new customer experiences, sometimes in quite a bewildering way, new ways to initiate a payment. But there's one point that I'd like to pick. I mean, most of these payments travel over the same ancient, rather over-engineered rails. And that's the point. They're not really an alternative payment end-to-end. They're a little bit of lipstick on the donkey, or if you want a different analogy, they're customer-centric, quite often in the way that a mousetrap is. Mouse-centric. They are there to get something out of the customer at the point of initiation. So that's what they are now. What could they be? I mean, they can be things which bring an enormous amount of benefit to the customer. They can provide these new services, but they can provide useful things the moment you initiate a payment. So it's a little check to say, can I really afford this? Have you ever noticed the payment instrument that does that? Perhaps Mobank can help with that sort of thing, I don't know. But simple, secure, convenient, all these things with useful value adds, and perhaps delivering something more in that end-to-end experience, perhaps an instant transfer of value between the payer and the payee. At the heart of it might be something significantly different. But I'll leave it at that. There's a visionary side, and I think there's where we are now. And where we are now has been really enabled by the mobile phone as a catalyst. Just don't get focused on the mobile phone, because it is only a catalyst. Everything will be mobile soon as an option. There are far more things coming.
Forgive me for going slightly off record here, or off script. I represent a very angry community. I don't think we talk enough about that's the retail community. And we all talk about the consumer proposition. And I've just come from a pretty bruising session this morning where there's an increasingly militant group of retailers. We're kind of tired of this game. And so let me tell you what I think the game is. We've evolved over over a period of time, and it may allude to the point that Sam is talking about in terms of acceptance. Let me just share anecdotally with some of you who may or may not know this, that the retailers don't actually have a payment problem. The retailers have a problem with the cost of payments. So ironically, we should all actually applaud the much hated Visa and MasterCards, because my colleague on the left here wouldn't have a Visa prepaid business or a MasterCard prepaid business, etc., etc. We wouldn't have a PayPal business if the rates weren't so high in the sort of nascent payment instruments. I'm not going to have a technology discussion. I'm not going to have a convenience discussion. So if you sit with Tesco's as a client of mine, would they consider remotely an alternative payment if the cost was relatively low? So there's a whole lot of things going on here. So a retailer today sits there, and let me share with you what happened in the UK market. You may wonder why you suddenly got a Visa card through the post a couple of years ago, right? And you probably didn't care. Well, the retail banks were offered and incentivized and increased interchange. So MasterCard Game was in town offering 6p, so they went to the finance directors, including myself as the managing director of Barclaycard, and they said, we'll give you 8p every time there's a transaction issue. Cardholder was agnostic. Issuer suddenly said, I'm getting 2p every time you process a transaction, and the retailer sat there and said, oh, now I've got to swallow that. So if you follow the interchange logic just momentarily and understand that the incentive for issuance is driven by one fundamental thing only, we all have a go at the schemes and the associations. But while those things are relatively high, these other things enter. So why haven't we seen the emergence of a third scheme in the European space? We've all got an opinion, but one of the fundamental reasons is who's going to issue a card as a retail bank to ride over a railroad that's going to offer them half a penny if the substitute is going to give them 8p. Irish market is switching as we sit here today. Laser's gone. Why? Because they've incentivized. So the point I'm making here, right, is that the only way you're going to find a way of acceptance, yes, there's technology, interoperability, and you can sit in a retail forum today, they do not have a payment issue. The only reason why they're exploring alternatives is simply because the economics of the existing mechanism is too high. So my final point is we now see 27 pieces of global regulation underway in the world, And there's one outcome of regulation, that's typically interchange goes down by at least half. Whether you take the Aussie experience, we're seeing what's going on in this market as well. We see what Durban legislation has done, etc. So I suggest we make hay while the sun shines, because when interchange comes down to an acceptable level, we're going to have a greater challenge in getting retailers to accept all these new forms of payment, form factor aside.
Smartphones influence 5.1% of offline sales at the moment. So the kind of thing I'm talking about is, how do we start integrating the fact that most of us are carrying some form of clever phone around with us these days? How do we help businesses get consumers to use these things to advise them about where to buy it, what to buy, etc., and then complete the circuit? Why can't I now use that to also make the payment and purchase something? And of course, in some circumstances, I can. And that's, I guess, part of the frictionless ideas you're talking about. Those are things that consumers want. They want convenience and they want ease, but they are still shuddering. And if you look at the YouGov survey, they're shuddering at the thought of data security, theft of money, and also what happens if I want to change from Vodafone to O2. What happens to all my money information in my phone? What happens if I get a phone upgrade? Those are the things that customers and consumers are talking about today, and we're not addressing what the consumer's wanting. That's not what we're spending our time on collectively. If we started doing that and got one or two of these things to integrate and get one or two great schemes working where people can make selections, make purchases, get information that works for the retailer as well, if we can get one or two of those things going, this is going to explode as an approach to modern retailing, modern shopping.
All types of payment development, new payment development at the moment, are disintermediating banks from their customers. At the end of the day, they look after their customers' funds, and pretty much they do that pretty well in the retail side, I have to say. But they look after customers' funds. They're a source of value. They provide retailers with their cheapest form of payment mechanism in terms of cash, which every time I speak to large retailers say it costs us less than anything else. But they really want to help their customers much more in that retail space and be more involved in the retail space. Just because Visa's involved doesn't mean the bank who is the issuer of that Visa card is involved. What does it know about the customer's transaction at the end of the day? I think somebody else said earlier on, banks can't use the data about customers' transactions for legal purposes. Well, I'll go away and investigate that. The reason banks can't use and help their customers plan their spending is because they don't know what they're spending it on. They're disintermediated, and that's where I think banks want to go. They want more to get back to their customers, and they want to be more involved with their customers in the future. And payment developments which do that will be the ones which will be favoured by the banks. Because let's face it, I mean, interchange, as you said, interchange is pretty much threatened these days. I'm not saying it's entirely on its way out. We'll probably be saying that in 2020, but it's threatened. And that after that destabilising manoeuvre, you've got to think about what replaces it. What's the value of offering a payment service for a bank? And everybody else wants data about the customers. Google wants it, PayPal want it, retailers want it, Mobank wants it. They want to understand their customers. Why not a retail bank in the street? And I think their route to that is more control of the payment process. And hopefully we'll see things which help with that in the near future.
I don't know if people have seen the Starbucks Touch to Pay app.
Yeah.
Again, that's just creating, and so sort of to the point that Chris was making earlier, well, wait a second, why should we remove friction? Well, these are purchases that are going to be made anyway. So the real question is, how do you make it as easy for the consumer to do something that they want to do anyway? So with the Touch to Pay, you're just shifting. So you're allowing, instead of having to go through that card-based payment, there's another payment. Okay, at the end of the day, there's going to be some settlement somewhere, because at the end of the day, you've got to put money onto that card. But in places like Norway and Sweden, where they have pay on using, they call it their facture, their sort of a receipt. So I order a good, I tell the retailer that I'm going to pay 15 days down the line, and I settle up later. Well, there's no reason that can't be done in the shop. And then again, you're just moving that payment around, and rather than being in a terminal. And it's probably not great for VocaLink, but instead of moving it from a terminal, you're moving it someplace else. So I think in terms of talking about alternative payments, it's almost saying, well, actually, we're going to defer the payment some way, and we're going to allow that exchange to happen without a physical card-based or cash transaction taking place right there.
I don't see why that's not great for VocaLink. But you're talking about disintermediating a cards world, by taking out a cards world. We don't have any interest in that. We have no interest in cards. But we do have an interest in improving the services available to retailers and services available to banks. And making, actually, you said some settlement will take place somewhere in the background. We actually believe the best place for settlement to take place is right there and then, so the retailer has the money, the customer knows where his account stands.
Okay, thank you very much, everybody, for your kind questions, and of course a round of applause for the panel. Thank you.